Where can you invest 5K? If 5,000 is all that you have, then yes, you can also join the Investors Club today and start making money through your investments. This also goes for those scratching their heads trying to figure out how much money is enough to start investing. If you're either of these, then sit back as I take you through 7 different places that you can start investing with as low as 5,000 shillings. And as always, if it's your first time here, please consider subscribing and join the quickly growing community of young people determined to change their financial lives through financial literacy, especially in personal finance, investments, and business. Let's get right into it. The first place that you can start investing with 5,000 shillings is the money market funds. Money market funds are low-risk investment accounts which allow you to earn interest on your money while pooling resources together with other like-minded individuals through unit trusts. Money market fund accounts are easy to open and come loaded with liquidity, whereby it's easy to access your money just in case of an emergency. In most cases, capital is preserved and they are therefore one of the most secure options of investments. It has been referred to as the safe parking zone for money simply because it offers investors a safe haven when markets are volatile. And because of that, many investors have chosen to use money market funds mainly to achieve 2 things: safety and returns. And by the way, they are one of the best options which you can use as a short-term investment vehicle. You can also use it to hold your emergency funds and at the same time as a savings account to reach your short-term or mid-term goals. This account is best for everyone, and it's also one account that everyone should literally have. I will leave a link in the description below to a video I did on understanding money market funds, and if you so wish to understand more about it, I think you should go and check it out. The second place that you can start investing with as low as 5,000 is the equity fund. This is basically investing in the equities or the stock markets, but indirectly through the mutual funds. An equity fund is part of the unit trust where the money market funds also fall. It is a high-risk fund considering the fact that the money is invested in the equities or the stock market, which can be pretty volatile. There are several benefits which come through investing in equity funds instead of going directly to buy stocks or equities by yourself. Buying equities through an equity fund helps you by spreading your risk. And by this I mean that if I bought 5,000 bob worth of equities, for example, then I have joined several other investors who have pooled their resources together to also buy equities. There is a fund manager who now takes that huge fund and then goes to the market looking for different types of equities or stocks which are performing well or have good indicators, and then spreads the fund across several counters, sometimes up to 25 different counters. At the end of the day, my 5,000 has been spread across over 20 different counters or companies, therefore spreading my risk in more counters than I could have afforded buying directly by myself. And this is because the minimum number of shares that I am allowed to buy as an individual is usually 100 shares per company. And that is if I was going to buy directly from the stock exchange. So assuming some shares cost 200 bob per share, then it means I wouldn't afford as a beginner simply because the minimum that I would have been required to have is 20,000. Equity funds make this possible for everyone to benefit from the shares as long as they are doing well. The other thing you get through equity fund is diversification and peace of mind. You don't have to scratch your head to know which company is doing better or which one is at risk of going down or when should I buy or sell, because that job is already taken care of by a fund manager. But please be advised that these are long-term investments whereby for you to realize any significant returns, you need to invest or let your money stay for between 4 to 7 years in the minimum. The third place where you can start investing with as low as 5,000 shillings is in the balanced fund. A balanced fund is also a part of the unit trust, and this particularly caters for that investor who is conscious of security. These are simply those people who want a combination of safety and returns. The balanced fund was created to allow you to have your money in a safe zone which is money market funds, and to enjoy returns which come with the equity funds. The fund manager, through regulation, now plays with a mix of the two to give the client better returns. In that, when the equities are doing well, more money is allocated to the equities, and when the vice versa happens, more money is moved to the money market funds. Therefore, there is always that balance between money markets and the equities. The balance fund is mid-term. It also gives good returns after usually 3 to 5 years. Therefore, if you wish to try the equities, but cautiously, you can start with the balanced fund. The fourth place where you can start investing with as low as 5,000 is the bond fund. The bond fund is also a part of the unit trust, which by now you should know that a unit trust is a pool of resources from several or various investors with one goal in mind, which is to make return on the investments. The funds are managed by a professional fund manager who, according to the fund, goes to the market to find the best return on investments. And once returns are realized, they are distributed equitably to all the unit trust holders. So, as the name suggests, a bond fund invests in the bond market. What it basically does is to go and distribute your money through treasury bonds and corporate bonds that are doing good. By investing your money in a bond fund, you are trading in bonds. Only that you do not have to go through the hassle of long-term time commitments, high minimum amount requirement to buy the bonds, which is 50K for some bonds and 100K for others, and the hassle of going through the bidding process, going to CBK, doing paperwork, and all it entails. The next place that you can start investing from as low as 5,000 is by buying shares directly. Yes, we have already talked about the equity funds and the many advantages that come through buying shares through an equity fund rather than going straight to the market. But if you understand a little about investments, or you have enough time to do some research by yourself, you can become a shareholder in one of your favorite companies by buying directly instead of going through the equity funds. These shares will enable you to earn dividends at the end of the financial year, and also could help you benefit from the capital gains where the share prices changes up or down. The minimum amount that you're allowed to buy in terms of shares is 100 shares, and there are several companies whose unit price is below 50. If the buying price is 50 or below, that means that I'm able to buy my first 100 shares with my 5K, and therefore becoming a proud owner of my favorite company. I've noted that one of the brokers locally has set up a very fantastic application through which you are able to buy without necessarily going through the paperwork, and it also gives you the benefits of buying less than 100 shares. I'm currently doing a test with this particular application, and once I'm done, I will come and share it with you right here. So if you haven't subscribed, I think it's time to consider subscribing and turn on the notification bell so that you will not miss any of the wonderful upcoming videos. And in our second last option, where you can invest with 5,000, is the pension funds. The pension, as the name suggests, is basically an account that you will need during your retirement years. As much as it might seem like an account that many people will not prioritize at the moment, but the truth is that if you start investing early in life, you are more likely to benefit from the time factor, which grows your money through compound interest. Most pension fund accounts available in the country allow you to open an account with way less than 5,000, and you can choose to do the top-ups or continue saving for the rest of your working years. Some of the returns being given by the companies out here have maintained an average of 10 to 14%, which beats inflation and guarantees your growth through compound interest. Besides giving you tax relief benefits for investing in the pension, the return on investment that you get from the pension fund is one of the highest returns that there is to receive in comparison to other investment options. And last but not least, if 5,000 is all that you have to start investing, you can as well start investing it in a business. There are several businesses that you can start with 5,000 or even less. All you need to do is to put your ego aside and get down to business. Some of these businesses you can start with below 5,000, sometimes have the capacity to earn you more than 1K per day, which at the end of the day happens to be the highest return on investment that you can receive from investing 5,000 in all the options that I've already shared. So if you have the time and the skill, then you can consider this option as one of the best options that you need to take to invest your 5,000. I hope you've learned something from this. So please leave your feedback in the comment section below. And also, if there is any other investment that I have forgotten to mention, you can also include it below. Thanks for watching, and I'm looking forward to seeing you in the next video.